So, good evening, everyone. It is another chance that we have gotten again to push through. Uh, just a reminder that Matthew's e-CPA tutor handles so many things. Apart from tutoring CPA, we also handle so many other things that are very vital in the contemporary society that we feel and always is crucial to most of the institutions. So apart from tutoring CPA, we also do other services. One is about actually tax is about tax. That is the filing returns. You know, the financial year is ending June 2026, and therefore all the institutions, personal, individual, and even those who are not yet in employment are required to file nil return. Are required to file nil return. So it is actually necessary to let you know that you need to file your returns. So we are doing filing of returns as well. We file returns. So we require you, or we remind you that avoid penalties by KRA, and to avoid that, you know, they are thirsty for raising revenue, and the only way that they will raise a good amount of revenue is through penalty. So by all means, avoid penalty by ensuring that you file your returns in time. Another thing that we do CV revamping. We revamp CV for job searching. Are you there? You are searching a job. You still don't have a standardized CV. Get to us, and we will get you up to date as CV is concerned. And again, I want to let you know that we are also offering bookkeeping and accountancy, accounting and bookkeeping. Should you have problem with how to record transactions, either in your business or even your business, reach out to us so that we can advise you. We can provide you with the crucials and actually the basics that are required in actually handling that. That is bookkeeping and accountancy. We also ensure that we are also offering tax consultation services. Are you actually not able to fathom or to understand some basics or some technical terms in taxation, or there is something you want to learn about? Like now we have the e-teams that is to be effected actually from this month going forward. So you need to actually acquaint yourself with what is required and what is actually recommended as taxation is concerned. So it is high time that we understand that we are doing actually that. So reach to us so that you consult us. And although of course there is consultation fee, but it is manageable. Because we also want you to prosper financially. We need you to prosper financially. And again, there is also what we call the statutory deductions. That is also very hard sometimes to understand. So if you have a problem with any statutory deduction, how they are calculated, when they are submitted, how they are submitted, what is to be done, that is the NSSF, that is the share. We also have the payee, that is the payee. We also have the housing levy. Which one again am I forgetting? The statutory deduction. Yeah, those are some of the key things that actually we need to understand that is required. The NSSF, well, of course, that is now it helps us to plan about the future, our retirement age, when we will not have the strength and power maybe to undertake some activities. So that is all about Matthew's e-CPA tutor. We offer those, and in CPA, actually we have begun with CPA, that is under CASNEP. You know, CASNEP offers so many courses, and we consider starting with certified public accountants, and we will also consider maybe actually introducing HED, that is accountant diploma technician, accountant technician diploma. We will also have CPA, that is certified investment financial analyst. We will also considering actually bringing that on board. So there is plenty for us. There is plenty for us because we want professionals. We need professionals in this country, people who can take this country forward. Yes. So to leave that, I just want to embark on financial management. Financial management is a unit in intermediate level. That is a CPA 3. CPA 3. Financial management. Of course, my students already know that we have tackled topic 1, and now today I want just to say something about topic 2. Topic 2, that is financing decision. Financing decision. Actually, that is what we want to check today. Financing decision. Financing decision. The financing decision. So you know, when matters finance, you have to make decision. Financing decision. Yes, the financing decision, and that is topic 2. Just come in and click whatever you want to do. Financing decision. That is topic 2. Topic 2 in financial management. Financing decision. Of course, there what we need to understand is nature and objective. We need to understand actually the nature of financing decision and even the objectives. Why is financing decision necessary? Why must we decide when dealing with finances? Yes, very key, because decision matters. Financing decision. So first of all, we need to understand the nature. While digging deep into this, understanding the nature. Understanding the what? The nature and objectives of financing decision. Of course, after also learning about what is it? What is financing decision? So, of course, it is a decision that for you to actually make decision about funds, you can't make decision with what is not there. Of course, you can't make decision with what is not there already. So you have to get it first. So actually, financing decision begins from raising finances. How do you want to raise finances? Like for example, in institution, like maybe Matthew's e-CPA tutor, ways that we can use to raise funds for our institution. Yes, ways that we use. How can we solicitate? How can we raise funds for ourselves? Ways of raising funds, because we need funds to move. We need funds to keep moving and providing actually quality services to our students, our customers, those who actually really believe in us. We need to provide the best for them, and to do so, what do we need? We need funds. And so, ways to raise funds. We always raise funds. After raising funds, we have to make decision. How do we want to use the funds? Of course, yes, that is it. That is what it entails. It begins with raising funds that will be used in making the acquisitions. We need to, like for example, maybe we need a very standard laptop. We also maybe need a camera, a serious camera. We also may need a projector. Of course, we need such. And when we need those ones, what may be the question? what is our budget? What is our budget? What is our budget? And when you ask, when that question is raised, it will always be, how much can you afford getting? What do you have? What do you have that you can bring on the what? On the table. In that case, many will say, I am the table. I am the table. I am the table. It is very nasty, actually, nasty reason to give. So raising funds. After raising funds, you use this fund to acquire maybe assets that are to be used in the business, in the institution. So the financing decision, it concerns liabilities, equity, money that maybe me together with my friend, we partnered to raise some funds. And so this fund that we partnered, we agreed to bring some money in whichever ratio. And that money, it forms the part of the equity, the capital, the equity. Yes, that is it. We get that into the business. Then that is not enough. We still need a lot of things. So we need to raise more funds. That is now when you will think of loan. Yes, maybe loan. Or maybe if you have something to lease. Such like things. So it involves various factors. There are many factors to consider. So financing decision involve various factors. Yes, there are some factors that you have to do what? To consider in doing this. So first of all, you have to identify selecting projects and capital expenditure analysis, raising funds on the most favorable terms possible, and finally managing working capital such as inventory and account receivable. So you know that is something that is very, very logical, something that cannot beat logics. It is very logical, very correct. Yes, you have to make decisions. We want this amount of money. We want to go for this because it is the best. We want to start with this one. This is how we want to utilize. So it's very key, ladies and gentlemen. It is very key, ladies and gentlemen. So that is all it entails, the meaning of it actually. Then the nature and objectives. So you will realize that the nature of financial decision, it varies from one institution to the other. It is not the same. From one firm to the other. So, or even maybe in terms of time, it may differ in terms of time. So the nature may be influenced by maybe various conditions, like maybe the prevailing microeconomics and macroeconomic condition. So those factors, as at now, I believe my students understand what micro and macro factors and even micro and macro factors. I hope we understand. So microeconomic factors can also influence the financing decision. The nature of financing decision. Ladies and gentlemen, up to there, any question, so that we move together. You know, this is financial management. We have to manage our funds. So in microeconomic factors, there are some conditions of farm. Take your bag and leave. Yes, I hope you are getting that. So there are conditions of farms. There are some internal conditions that actually may determine the microeconomic factors. Yes, so first condition that we need all of us to know is nature and size of the enterprise. Yeah, the size of the enterprise, nature and size. Nature and what? Nature and size. Size of the enterprise. That is the farm. The size. How big is the farm? What is the farm handling? Yes. Size like this. Level of risk and stability in earning. Level of risk and stability in earning. Yeah, there should be stability in earning. Earning money or earning money exactly. In raising and generating income, there should be that stability. Yeah, there should be stability in doing that. So that is another condition that may influence. That is another microeconomic factor that is an internal condition that can influence microeconomic factors actually to maybe bring a challenge to financing decision. There is what we call liquidity position. When we talk of liquidity, actually we are meaning money, cash, liquidity position, and the fourth one that we need to all know that is asset structure and pattern of ownership. Asset structure and what? Asset structure and pattern of ownership. Pattern of ownership. Yes. Another one is attitude of the management. Attitude of the management. The management. What is the attitude? That will also influence. These are an internal condition that will influence. Actually, when we talk of microeconomic factors, these are factors that are within that affects the farm, within the farm. That is why we talk about the attitude of the management and asset structure. Those are things within the organization. Liquidity position, that is the flow of cash. Then the level of risk and stability in earning, nature and size of the enterprise. Thank you. Any question, the ladies and gentlemen? So when we talk of nature, is what is the farm doing? That is it in a manufacturing line, or does it provide a service, or what is the scope of what the farm is known for? What is the farm doing actually? The level of risk and stability. The level of what? The level of risk and stability in earning. So risk. When we talk of risk, level of risk is uncertainty. Like those forces that will work against the plans that you are implementing. The forces that will work against the plan that you are implementing. It is always being said that the risky the project, the higher the discount factor. The greater the risk, the higher the discount factor. So that one means risk influences the long-term investment decision or capital budgeting decision. If risk is higher or income is not stable, the finance manager tries to impress or impress on the shareholders for more retention of earnings rather than adopting liberal dividend policy. Yes, the shareholders, like the manager, the finance manager, in a case where the retain, like there is no stability in earning, shareholders are paid dividends. They are paid dividends. So in a case where the firm is not able to actually produce, is not able to produce what is required, is not able to actually generate income, there is instability in generation of income, then it will force the finance managers, actually, when it comes to payment of dividends, they will tend to retain more for expansion in case maybe the sources of maybe the generation is affected in either way. So they will retain more than they pay to they will retain more money than they pay to the shareholders as dividends. I hope you get that. That is about stability, and that is about stability in earnings and the risk. Then we have liquidity position. Liquidity position. We also, like when we talk of liquidity, we are talking about dividend, like cash. That is cash. So, for example, in cases where the working capital requirements are very large, or the firm has to meet significant past obligation, it will have to follow a conservative dividend policy. Any tilt toward illiquidity will alter the nature of financing and dividend decision. Like what we are trying to say, that since dividend is normally paid out of cash, out of what is there, firms with a sound liquidity position, sound, get the term, sound means reasoning rationally. So firms with a sound liquidity position adopt a liberal dividend policy. A liberal, we are together. Thank you, ladies and gentlemen. As we get along, we are able to actually understand these terms and concepts. Asset structure and pattern of ownership. Asset structure and pattern of ownership. Asset structure and pattern of ownership. Again, we are talking about this. So when you talk of asset, all of us know assets are things that belongs to the business. Again, in a closely held company where the ownership lies in a few hands, the management does not find it difficult to persuade the owners to accept conservative dividend policy in the interest of the firm. But in cases where there are many shareholders, their wishes matter considerably. Yes, so you find that when you are dealing with few shareholders or owners of the business, it is easy actually to persuade them. But when there are many, maybe others are even not around, others are very far. But when actually making decision on some matters, they must be available. They must be consulted. Their idea is to be actually considered. So you find that handling that may be very crazy, may be very difficult, very hard to actually undertake. Then when we talk about asset structure, actually it goes hand in hand with that, because asset structure, that is how, for example, in cases where there are many shareholders, their wishes matters considerably. So even how assets are to be utilized. Maybe there is an asset that is faulty and maybe it should be replaced. So they have to be consulted on such matters so that the right thing is done. Then we have attitude of the management. For example, a conservative finance manager. Conservative means, shareholders are paid out of the profit that the business has realized. So this profit There is that amount that is retained to expand the business, then there is that amount that is paid to the shareholders as dividends. So you realize that a conservative financial manager, meaning he will also always ensure that the amount that is used for expansion is greater than the amount that is paid to the shareholders. I hope you're getting that as a dividend, so that the business is able to flourish, and even expand. So on the other hand, aggressive finance manager will stress on the latter, like will stress on what? On giving or paying much to the shareholder. So conservative finance manager will actually attach greater importance to liquidity rather than, that is, to money that is available, rather than to the profitability. On the other hand, an aggressive finance manager will stress what? Will stress on the latter, that is profitability, and financial decision will be taken accordingly. For example, a conservative finance manager attempts to trade a beaten path, preferring to avoid fixed obligation for raising additional capital, even if debt financing is advantageous. Yes, debt is very risky. Debt liabilities are very risky. So you will realize that assets, they will even earn you, like they will bring money into your pocket even when you don't work. But liability will be taking money out of your pocket again and again in several locations, and will now be leaving you bankrupt. Will leave you bankrupt. Yes, will leave you bankrupt. So those are some of the conditions that may influence actually the financing decision. Those are some of the, when we are dealing with the micro. So there is also the macro part of it. Macro factors are environmental factors that are beyond the control of the farm. Macro, outside the farm. That is macro outside the farm, like the policies of the government policies, the state of the economy. Those are things, inflation, they will always affect the business, like they are beyond the control of the what? Of the business. So the above are, that is the state of the economy. Like now in Kenya, it is being said that the economy is performing better as compared to last year. I have not done my research, but you are like the gaze is just correct. Your gaze is correct. Are you getting it? Your gaze is correct based on how you are actually feeling the weight financial, how you are struggling financially. You are able to know actually the state of the economy. So the state of the economy is actually, it's a broad thing. It changes. It always changes from time to time, and the financial decision of the firm conform to these changes. Like we will always, there is always what we call, when the economy is going through there is always the depression, recession, and like that time when the economy is performing better, when the economy is undergoing through tough time, like I guess right now things are not good, things are not well, my friend, things are not right. Let us not be hoodwinked. So government policy, so the economy actually will dictate even the prices. When we talk of economics, that is the law of demand and supply. Okay. The law of demand and what? Economics, actually, economics is about utilizing the scarce resources maximally to achieve satisfaction. Resources are very scarce, of course, they are very, very scarce. And so, using the scarce resources to do what? Using them maximally to raise or to achieve satisfaction. you are making the right decision on how you want to handle some things. Yeah, so it is exactly that. That is one thing that I need you to be aware about, and that is one thing that I need you to be aware about. Economics, the law of demand and supply. Like for example, during harvesting period from our region, from the region where I come from, you will realize that as at now, a tin of maize is going at 130 shillings. But at that point of harvest, they were selling it even at 50 shillings. So it was like the supply was plenteous. It was many. It was the market was flooded with maize. A tin of maize was going at 50 shillings. So as people keep selling, they remain with less. And these are people who actually, they do agriculture for consumption. And this is the mediocrity that is affecting many of people in Kenya. You find that people are just thinking about food. Instead of, they have a huge tract of land. Instead of just utilizing the land actually to do the cultivation and have plenty harvest that you can think of selling. People only think about food, and they think that when they have food, they have achieved it all. So you still see we are struggling. So you realize that in that case, the maize was going at 50 shillings, now at 130. It was going at 50 shillings because it was plenteous. Like the supply was much, and therefore the supply was high, demand was low. So it was going at that. As at now, the supply is low, which is making it to be at 130. The supply is low, the demand is very high. So the law of supply and demand will always dictate the economy. Government policies, these are policies that may maybe influence even the operation. Like apart from the state of economy, government policies is no less significant in influencing corporate financial decision. It's also influence state intervention or state regulation is found in almost all countries. Thus, corporate investment decisions are governed by the nature and extent of state regulation. Like now, you must have a business permit. You must pay taxes. You must embrace code of ethics. Such like things. So I think I can again also highlight what? I can also highlight the objectives of the financing decision. Objectives. So there are two fundamental types of financing decision that the finance team needs to make in business. That is investment and financing. The two decisions boil down to how to spend money and how to borrow money. Financing and investment. The overall goal of financing decision is to maximize shareholder value. So every decision must be put in that context. Maximizing the shareholder value. That is the decision. That is the objective. You do anything that is contrary to that broad objective, you are kicked out. You are against the objective of the business. So when we talk of investment, it revolves around spending capital on assets that will yield the highest return. Spending money on what? Spending money on assets that will do what? Will bring highest return. Then we have, of course, the investment must meet three criteria. There are three criteria that investment must meet. It must maximize the value of the farm. Yes, it must maximize the value of the farm. And again, it must be financed appropriately. Appropriately, that one is to say, we will talk like it is something that must be done with some it must be done rationally. If there is no investment opportunity that fails, 1 and 2, that is it must be maximized, it must maximize the value of the farm, it must be financed appropriately. If there is no investment opportunity that fails 1 and 2, the cash must be returned to shareholder in order to maximize shareholder value. Very interesting. Strive so much, strive so hard to be a shareholder of a company. You will enjoy because you are people who make decisions to change, to revert, to improve, to improvise. Lively scenes, lively scenes. So let us stop at that point. Let us stop at that point. We're gonna continue at some point later. I just want to all my students to be acquainted. Consistency, number one priority. Be consistent. Do it over and over. I'm gonna share the part that I've discussed. I'm gonna share so that you go deep down, you go into the gist, you understand, you get there. Otherwise, this is your tutor of CPA, that is Matthews Okuku, a gentleman who is interested in actually imparting knowledge aimed at professionalism in financial globe, in financial level. Meet you there next class. Always strive to be part of this team. Otherwise, thank you. I'm glad.